Today, a spotlight on Rockdale. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. Today I'm going to do a deep dive on property in Rockdale, and I think you'll find this quite an interesting discussion insofar that when I did Redfern, I had quite a few real estate agents basically saying that prices were rising and I was wrong. Well, they then referred me to Rockdale and said, well, Rockdale is also booming. We'll see, shall we? Anyway, before we start, just a quick reminder that on Tuesday the 20th of October at 8 p.m. Sydney time, I'll be updating my household financial confidence data based on our surveys. And given that we had the Westpac data last week suggesting a very strong rebound, it'll be interesting to see what our surveys say, because of course, if there really is a rebound, then possibly it might impact price trajectory ahead. So join me at 8 p.m. Sydney, the links are below, and you can ask a question live or send one to the DFA blog beforehand. So now let's get on and have a look at Rockdale. And I should just remind you that the information I'm going to share with you is based on my analysis. It's not financial advice. You shouldn't rely on it. And of course, it may change over time. And the first point I want to make is that this information is based off our core market models. We obviously continue to survey households on a regular basis, and we include quite a lot of other information which allows us to put a picture together based on a bunch of different dimensions. Specifically, it means that we can look at mortgage stress data, the price trajectory history data, the buying and selling intentions from the surveys, data on migration, and the economic data, which includes CPI, wages, employment, and includes also JobKeeper and JobSeeker. Now, all of that information goes together into the core market model. And the core market model is where we basically run our different scenarios. And as you may know, we have a number of different scenarios from less aggressive and more aggressive. And that allows us then to look at information at a postcode level, at a state level, at a region level, or indeed across the whole of Australia. Now, with regard to Rockdale, I guess it's important just to locate it. For those who may not know, Rockdale is located south of Sydney, and it is close in to the CBD, just a few k's south, quite close to the coast, and on the Princes Highway. It's actually not that far from Redfern that we looked at previously. Now, here are a few views of Rockdale. This is the main drag down the Princes Highway. And this is the Princes Highway just a bit further on. And you'll notice all of the high-rise development. And one of the observations about the area is that it has transformed remarkably in recent years to become much more concentrated, much denser. And even if you take a turn off the main road, then you soon come to high-rise development or low-rise development. And there are many, many units still being constructed in the area. If you look a bit harder, you can still find some green streets, but even then, quite a few of them are units. And we'll show you later that in fact the bulk of people are living in units in the postcode. Now, when it comes to properties for sale, there are around 128 properties for sale across the whole postcode, 2216, but you'll see that quite a few of them are concentrated in and around Rockdale. And here are a few examples, and one of the obvious things I want to highlight is that a number are available for sale by negotiation. Now, by negotiation tends to signal a weak market, because what it basically says is I'm open for a conversation and we'll try and meet a price. There are also a few auctions, and I highlight the fact that auctions, of course, tend to gravitate more towards houses, as is this one in Banksia, but occasionally you will see some auctions for units as well. And as I said earlier, the bulk of the accommodation in and around Rockdale is units, And there's a combination of older style, newly constructed, and in the point of being constructed. And I guess you can conclude that there is quite a lot of choice around, particularly for those looking to buy a unit. In terms of what's sold, around 48 properties sold in the last 8 weeks across the postcode, and again there's a bit of concentration around Rockdale. And looking at some of the properties, the first thing to say again is its last asking price. In other words, they don't tell you what the price was, or indeed if it was an auction and it was sold, they don't tell you that either. That information is not back in the portals for a long time, and that's one of the reasons why I have a doubt about the veracity of some of the information held within the portals. They also quite often show ranges, and very interestingly, the fact of the matter is that ranges suggest that prices probably ended up lower. Here are a few examples. In Rockdale, there was an auction for one apartment there. Last asking price, and sometimes you'll continue to see ranges also quoted. Now, in terms of current price trends, this is the median price information, and you can see that back in 2013, the median price for a house was around $730,000. In 2020, it's $1.14 million. But the journey between those 2 points was not linear. In 2014, it rose by 30%. In 2015, it rose by 26.7%. It fell in 2016 by 7.9%. It rose in 2017 by 21.1%. It fell in 2018 by 18.5%. Fell slightly in 2019 at 0.5% down, and rose slightly at 4.1% in 2020 to date. And that translates, in terms of average per annum gain, 7.4% between 2013 and 2020. So prices certainly haven't doubled. But if you adjust for inflation, it's about 5.4% per annum. Now, you can also look at the Valuer General data for the postcode. The Valuer General data is a very valuable resource for properties transferred across New South Wales. And so you can get a sense of the precise price, the sale date, and also the property land area. And there's a bit of a thing going on here where many properties are being subdivided, so we're seeing the average property size in terms of land area decreasing. So now turning to units, back in 2013, the average unit price was around $485,000. In 2020, it's $625,000, and the journey between the two prices was again non-linear. In 2014, it rose by 15.5%. In 2015, by another 8.9%. In 2016, it was pretty flat. In 2017, it rose 9%. It fell in 2018 by 2.3%. It fell in 2019 by 5.4%. And it lifted 1.6% so far in 2020. And that gives an average gain per annum at 3.8% between 2013 and 2020, or after inflation, 1.9% per annum. So again, no sign of prices doubling over 7 years. And once again, we can refer to the Valuer General dataset, and you can see there a range of prices. I would highlight the fact that there is a large number, and that obviously is a non-standard transaction. So we'd have to be a little bit cautious and careful to make sure that we remove any anomalous readings to get the right median price, which of course we do. Now let me move to the summary across the whole postcode. And the first thing to say that there are around 165 listings, with 85 added in the past month. That's a very high list of new properties coming into the mix. Compared with May 2019, listings were lower then, 150, and by the way, around 22% are houses, the rest are units. And that is that unitisation that we mentioned earlier on, we're definitely seeing it across the whole of the area. And the density of population is therefore increasing. Now, the gross yields on houses are around 2.5% per annum, and that's a fall from around 3.8% last year. But the net yield, that's after accounting for all the other costs of managing an investment property, is around 1.5% and is falling, and nearly 70% of property investors in my surveys are losing money at the moment on their property investment. In terms of units, the gross yield is around 3.5%. That's a fall from 3.8% last year, and the net yield is around 2.25% and is falling, and once again, a considerable number of property investors are underwater. Now, the rents for houses are falling at the moment. It's down about 9% in the past quarter, with a typical rent of $490 a week. And the rents for units are falling also, down about 7.5% over the past quarter, with a typical rent of $450 a week. Now, the vacancy rates are very high at 4.9%, compared with just 2.2% back in mid-May 2019, and there were around 270 vacancies compared with 140 last year. So there are a couple of factors here. Many of the units are actually normally rented to students, but of course they didn't come back because of the virus this year. And we also had some Airbnb property which has not been let. Now, the asking price for houses is on average rising at the moment. It's in fact up 12% over the past 3 months, with a typical house price of around $1 million. But the average settlement price is around 7% lower than the asking price at the moment, and the gap between the two is rising. Now, turning to units, the asking price on average is falling at the moment. It's down about 6% over the past 3 months, with a typical unit price of $640,000. But the average settlement on a unit at the moment is around 9% lower than the asking price, and the gap between the two is rising. And finally, the intention to sell property in this postcode, particularly in the Rockdale area where we're looking, is rising strongly. To explain that, we can look at our stress data. And if we do that, you'll be able to see that the number of households in the postcode are around 11,300. Now, of those in the postcode, around 3,500 are borrowing, 6,000 are renting, and around 4,600 properties are available for rent at the moment. And the number of property investors are around 3,600. Now, overall, the financial stress metric for this postcode is 53%. Now, we can then look at the breakdown between the types of property holders. Those with a mortgage, well, very few have any mortgage stress at the moment, only about 3%. That's a very low number. And the risk of default sitting at around 2% at the moment across the postcode, which is typically average. But if you turn to renters, 71% of renters in the postcode, which is more than 4,200, are in rental stress. And that means that their cash flow is not sufficient to cover the rental payments that are due. Many of them have been on rental repayment holidays and they're coming to an end. And a number of renters have indicated that they're likely to be leaving and looking for cheaper property, or indeed moving in with parents or moving in with friends later. And finally, property investors, about 54% of property investors are registering as stressed, of which around 330 are severely stressed. And that means that their cash flow is very significantly underwater at the moment. We're also seeing many investors in this area deciding to put their property on the market to try and cut their losses. That's one of the reasons why the property listings are so high, and why particularly the number of units on the market is so high, because it's true to say that many investors bought multiple units, often off the plan, and are sitting on a risk of loss at the moment. And because the vacancy rates are so high, and because the rents are falling, the economics for investors are deteriorating significantly. So let's now look at the price scenarios again from my models. And as normal, we run 3 scenarios. There is the best case scenario, which is my most positive one, and that assumes that the virus gets fixed quickly, the vaccine comes through, the borders get open, and students come back very soon. And in that scenario, we're thinking that for houses, prices might slide by 0.5% over the next year or so, come back into very slightly positive territory in 2022, and fall again, but only marginally, to give a 3-year fall of about 2.9%. Now, if on the other hand, the virus continues to come back and we get multiple waves, then the price fall is more likely to be 10% over the next year, followed by a further 4% in 2022 and a further 6% in 2023 to give a 3-year fall for houses of around 20%. But the longer term crunch scenario, which is where my highest probability sits, is looking for a fall of around 6.6% over the next year, followed by 3% in 2022 and a further 3% in 2023. So let's see how that translates in price terms. And here we have the scenarios applied to houses in Rockdale. And we start 2020 at 1.14 million. We drop 6.6% over the next year to 1.065. And in 2022, we drop another 3% to 1.033 million. And in 2023, we're just sitting pretty much on $1 million at down 2.7%. Now, if that were true, then that would put prices back to where they were. Well, in 2018, I guess, they were 1.1 million, so that's a lot higher. We'd have to go back to 2014-15 to see prices that low. So there is very little upside opportunity in my scenario. Now, if you apply the more positive scenario, then of course prices don't fall as much. And then if we look at units, well, our best case scenario has a 3.5% fall over 3 years. The worst case scenario has falls of 32.9% over 3 years. And my mid case has falls of 19.1% over 3 years. So that's the one we run with in terms of our model. And that moves prices from currently around 625,000 median, down 9.7% in 2021, down a further 7.3% in 2022, and down another 4% in 2023. So we go from 625,000 to 564,000 in 2021, to 523,000 in 2022, and 502,000 in 2023. And looking at our charts, that would mean we were looking at prices returning to where they were in 2013-14. And again, if you have a more positive view in terms of the virus and the economic bounce back, then the price falls may be less severe. But my mid case is still my highest probability scenario. So there you have it. There is clearly some evidence of more price pressure in Rockdale. We are seeing many units coming on the market, particularly from property investors. And the concern, of course, is if prices fall, they're going to lose capital. So a number of them are listing now to try and sell early. I guess if you are a renter and looking for units, you may be able to get a good deal on rents at the moment. But if you're a property investor holding property in this postcode, particularly units, well, things aren't looking particularly flash. And I guess it's also true to say that if in fact you are somebody who is looking for a house in this area, and there are some still around, then house prices are really not going to move up very fast. So you've got plenty of time to check the market out and see whether there's anything of interest. Now, I will just say that if you want to explore a particular postcode, we can do that through our one-to-one service. And the one-to-one service pretty much goes through the sort of thing that we've gone through today, with a bit more detail and with the opportunity to look at multiple locations within a postcode. And essentially, this is a confidential discussion with me. Typically, it takes about an hour. It won't give you financial advice, but I can discuss the similar information as today, looking at the underlying trends, looking at the stress data, and coming up with a view as to what may be happening ahead. And that means I can look at stress information, home price trend data, and also think about where price trends might be headed based on my modelling. Now, typically these are a conversation held over Zoom or phone, and they can be up to an hour in length, but generally it's somewhere between 30 and 40 minutes. And if you want to engage around a one-on-one, you can do. There is a cost involved. It's $250 plus GST, and it's payable in advance. And if you are interested in pursuing this, the way to approach it is to contact me by the DFA blog. The links are in the comments below. Now, I should say that spaces are limited each week, and at the moment I'm booking somewhere between 3 and 5 weeks ahead at the moment, although if there is an urgent need for a consultation, I may be able to squeeze people in because I do get the occasional rescheduling or postponement. So it's worth thinking whether the DFA one-to-one service might be useful for you, and feel free to reach for me via the DFA blog if you'd like more information. And so that takes us to the end of this post today. Just recapping, Rockdale is showing signs of stress at the moment in terms of selling pressure. Prices look pretty weak, particularly for units, and the supply of new property coming on to be sold is increasing. These are not conditions conducive to property price rises anytime soon, and it does quite well mirror what happened in Redfern, which we covered a couple of weeks ago. I'll probably do some more of these spotlight shows. In fact, I've got quite a list of requests for other areas that people would like to see, including the Gold Coast, the Sunshine Coast, and the regions north of Cairns, to say nothing of West Australia. And if there are other postcodes you'd like me to cover, feel free to put them in the comments below. I don't promise to cover them, but I do maintain a list of requests and try and meet those where I get multiple requests. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.